Let's get more reaction to both Amazon and Apple's reports. Bring in Fast Money friend Gene Munster of Loup Ventures. Gene, great to have you with us. Don't know where you want to start. There's so much to dig into. Which was the report where you say the stock reaction was warranted?
Amazon, I mean, great results. The fact that they made and maintained is the new beat and raise. So positive on Amazon. Ultimately is that, so that spend curve, I just want to put that into perspective, this $4 billion in spending, is when they reported the September quarter, they talked about same day spending of $900 million in that quarter. So this is very in line with what they historically have done on that spending side. So I understand that reaction. Amazon makes a ton of sense. This is trading at over 100 times next year's numbers. That number is going to probably be 200 times after analysts make their adjustment to estimate. So not surprised. There is a difference between companies that are really changing the world and doing great things and great investments. And I want to draw a very clear line between Apple's results. To me, makes no sense. I always, when numbers come out, make a prediction about where I think the stock should be trading. And on these numbers, I was thinking that it would be up 5+%. Don't know where it's at this minute, but ultimately, this is a rock solid company. And I do I am on a different page than the investors, versus the traders. The conversation today was about Apple being an expensive stock. Understand for Apple relative to its past, it has moved up in the past year, but this is still relatively inexpensive. And at the end of the day is that Apple was the most at-risk large tech company coming into these earnings. They had flat revenue year over year, iPhone down 7%. Wearables, a number that they don't report, we can back into that quickly. It was up 24% year over year versus 44 last quarter. So it did decelerate, but still impressive what they're doing. And you think about the earnings power of this company is it's just there's a light year gap between thinking about investing in Apple versus Amazon.
What are the questions that you would have for each of these companies' management teams on the conference calls?
So from Amazon's perspective, this sit down because we got big plans comment from Jeff Bezos. What is that really related to? My guess is it's something delivery, but that's an area that they could fill in, and I think Amazon can continue to innovate. In terms of Apple, Tim Cook at a internal meeting a few weeks ago talked about some of the product roadmaps and some of the things that they're working on next year. I think you need to basically take 2020 and really discount it almost entirely and start looking to 2021. Which companies are going to be best positioned? And the question related to Apple is, how do you see your product trajectory? Tim Cook teased a few weeks ago with that internal meeting that they're going to have some iconic product that comes out of this. Maybe it's the 5G phone, maybe it's something else, but that would be my question.
Dan, you got a question?
Yeah, hey, Gene. So, you push back on the traders, in air quotes here. But, listen, this is a company that did not grow earnings or sales last year. It's not going to grow earnings or sales this year. It didn't grow iPhone units. So where should this trade based on, if you're saying look past 2020 and look at 2021, what is the valuation and where do you expect earnings to be next year?
So what I consider fair value would be a multiple consistent with some of the other large cap names, excluding Amazon and Netflix, because those are some of the higher ones. So if you look at Google and Facebook, in particular Microsoft, they tend to trade between 25 and 30 times. And yes, they do have higher growth at times, but I do believe that Apple, if you think about where they're going, think about everything around 5G, wearables, health and wellness, streaming services, all of these I think will ultimately create an earnings growth with the buyback. That was impressive what they did with the buyback today. I think this should grow earnings at 10 to 15%, very similar to some of these other large cap names. I've been a tech investor my entire life. I understand that cash is usually not that valued by many other tech investors, but the power that this company has to generate cash on a consistent basis, not in this period, but normally on a consistent basis, I think should drive at a minimum a consistent multiple with Facebook and Google and Microsoft, and that would be kind of 25 to 30 times.
Gene, thank you. Gene Munster of Loup Ventures. Tim, I go to you. In the past 2 days, we've had about 20% of the S&P 500 report in the form of tech earnings. So was this the ultimate sell the markets event? Because we had such a bulk of the markets report.
We rallied so... Yeah, we rallied so hard into it. I think we've seen this, first of all, at other earnings periods that haven't necessarily been COVID. that we really wanted the bottom up. We were so embroiled in a trade war and all this other macro. We wanted the bottom up numbers. These companies have largely given you a very decent outlook. Obviously, the last 2 days, the fact that the first 3 weeks of April was largely flat for Facebook, and Google was more or less crawling or stabilizing. And so I just think we have a case here where the valuation dynamic is very tough to call. We've been saying that since the start of the earnings call. But Gene pointed out the drivers in Apple. Those are very important. They're not changing. In terms of Amazon, there are companies like Amazon. Those numbers were fantastic numbers. Amazon's ahead of the class, but there's a lot of companies that pulled forward sales or were rewarded by the market because of their perceived or actual positioning as a taker of market share coming out of this. I think you have to be really careful. Look at what's happened to Walmart, which has been another big market play over this period. I think there are going to be reassessments of what's performed and what's not.